Hello, my name is Paul Marriage and welcome to the HI European Market Neutral monthly update for January 2024. So we've made a really positive start to this year, which is encouraging. To some extent, there's a little bit of mean reversion. Some of the things that hurt us a little bit at the back end of last year, albeit we had a good year overall, reversed nicely for us. So actually, the economic outlook and numbers were probably the narrative remains quite encouraging in the backdrop of rates coming off a little bit this year and beginning to come back, and inflation falling in most developed markets. So that narrative hasn't changed, but markets, particularly in the UK, were so strong at the back end of the last year that a little bit of reversion, a little bit of heat coming out was probably not that surprising. Interestingly, our best performer was actually Ocado, which had been a really painful short in December, and that reversed nicely on us and came back our way again, which is great. And we're probably right to stay short through that period. Our energy pair played quite nicely for us, added another 20 bips. And elsewhere, things like travel stocks rolled over a little bit again, having been strong. So quite a few of those shorts played out quite nicely for us, and the long book was generally pretty solid. The one single stock name that was a bit of a pain for us was our long position in Watches of Switzerland. Watches actually reassured us about the 24 outlook in Q4, early Q4, with a solid capital markets day. But unfortunately, Christmas trading was weak, and I think credibility of management, having been pretty positive in front foot probably 6 weeks before Christmas, to have come out with a pretty poor statement meant it was a big share price reaction, but also pretty long haul back. So we've exited that position. That was the only really bad hit for us in the month, to be honest. It was a pretty positive month elsewhere and generated a pretty good return overall. So a really good start to 24. I think our positioning is good in an environment where we see a lot of opportunities, and I think some of the short opportunities that were painful at the back end of last year may have recreated themselves. And one or two of last year's winners, sector-wise, like UK grocers, for example, could be interesting shorts this year as some of the food inflation and working capital tailwinds unwind for them. So we go into February pretty confident about where the book is. We'll keep working. There's lots of opportunities. That market background being slightly more positive in the UK is encouraging. And we thank you again for your support.